A very warm welcome to all investors gathered here. In today's event hosted by CIO Mr. Sunil Damania, we will deep dive into the budget and decode what really matters. Towards the end, we'll also host a live Q&A session. Before I hand it over to you, Mr. Sunil, just two important announcements to be made. Both model portfolio and portfolio optimizer would be moved to Infinity. We're getting a lot of queries by investors on how this will be done. And very shortly, we'll be having a webinar on the same. But before we move on to the event, we have the links available just below the video where we've extended the offer for the last few hours. You can start off with 14,999 for 1 year and we're giving you 2 years free. So that's a total of 3 years for MojoOne plus stock of the week, which is also added on. Over to you, Mr. Sunil.
Thanks a lot, Jason, and a very warm welcome all of you. I know it's not a very great day. First thing on Sunday, the budget got presented, so our holiday got this one. And anyway, what was expected in the budget? The market reaction clearly says that it has not lived up to the investors' expectation, and there are a lot of people are saying that there is no story, there is no major thing to take away. But when we look at the budget in a very meaningful manner, I don't think. So, क्या होता है when we are expecting a budget to be like a masala movie, and then budget turn out to be an art movie, then there is a disappointment. Am I right? Because the art movie will be appreciated by only certain class of the society, but the masala movie is expected like by everyone. Now it is unfair to expect, from the finance minister every year to give away benefits to the Aam Aadmi. It's practically not possible. Last year we had seen 12.75 lakhs income tax free. We saw GST rationalization happening post budget and so on and so forth. So there is a limit beyond which government can basically go and can try to satisfy everyone. So I know the market has given a really thumbs down to the budget. I'll also give my take on the budget, and of course, as usual, we will open the floor for question and answer. But before I begin my presentation, just a disclaimer that investment in securities market are subject to market risk. Please read the offer documents carefully. Please consult your financial advisor before buying and selling any stock, and past performance is no indicator of future returns. So let's try to understand what is the philosophy. I think the complete philosophy has been that Viksit Bharat. So I think this budget is not looking at FY 2027, FY 2028. I think it's looking at 2047. And I think it is a step in that direction the budget has been presented. And if you read the budget, so sometimes, when you listen to the budget speech, you don't get too much excited. But when you read the budget speech a little later, you realize the essence of what the government wants to do, and I think it's a move in the right direction. Again, I said it is more like an art movie. It's not like a masala movie. So not many people loved it because masala movie में बहुत मजा आता है public को देखने के लिए, art movie no. So I think government is basically looking at how do we take this country to the Viksit Bharat, and Viksit Bharat cannot happen in 1 year, 2 years. You need to do various gradual steps to take India to the Viksit Bharat. And I think this, what we call budget, has done the same thing in that direction. So we want to build capacity, we want to train the demographic dividend. So, and at the same time, we need to also ensure that which are the sectors, and if you remember the economy survey did talk about, which there are certain skill sets which AI cannot take it over. Am I right? And I think the budget has moved in that right direction to do that. At the same time, the finance minister also harp on the fact that sabka saath sabka vikas. So we can't have a growth where certain section of the society basically are not participating in that growth. So I think that's a basic philosophy that has been kept in the budget. So I think this budget has ticked some of the right boxes, and I'll try to cover that in the later part of my presentation. But having said that, there have been disappointment, no doubt about it. And one of the big disappointment has been no relief on the capital gains. I'll come to that a little later. But how did our MarketsMojo customer perceive that? And they seems to have been completely divided almost one third, one third, one third. So one third of a customer says it's a positive budget. That is 30%. Neutral has said 36%. So most of the if I have to just first amongst equal karna ho mujhe, so neutral seems to be the most category, the option that has been chosen by our MarketsMojo customers, and 34% of the customers says this budget is negative. If you ask me very frankly, will I put this budget, if I have to rate it this budget out of 10, I would definitely put it somewhere between 7.5 to 8. And I'll explain you why. Because I think it has taken, sometimes, are we playing T20 or are we playing 5-day match? And I think this is more like a 5-day match, which Ms. Nirmala Sitharaman is trying to achieve through the budget. And that's what the Modi government tries to achieve, that sometimes the benefit of what this budget has tried to do, we will realize 4-5 years down the line and we'll say, oh, that was the great step which has been taken, but we are not, because we love that the excitement, the T20 kind of a culture which is not there in this budget. So I want to tell you one more thing, and I want this to be highlighted thoda. तो मुझे निकाल दो screen से ये दिखे. So we always get a little excited कि जिस दिन is the market very wise to give that thumbs up and thumbs down on the budget? Then what happens after 1 year? For example, the power grid was one of the worst performing stocks on the last budget day. And it continued, it is down by 13.3% in 1 year from budget to budget. But at the same time, Bharat Electronics last year on a budget day was down by 3.7. It turned out to be one of the best performing stock. Why? Because moved up by 51%. Something very similar happened to Sriram Finance. 2.2% decline last year budget, but eventually it made, despite that 2.2, 87.6% return. The same way, the best performing stock last year was Trent. Why? Because of consumption basket, if you all know, because of income tax benefit coming in, the same stock did not sustain that gain and down by 40%, one of the worst. And something similar happened with ITC and something happened with IndusInd Bank also. So limited point I want to tell you, not necessarily when you read or listen to some of the experts, ये budget का stocks benefit है, will that reflect the next 12 months down the line? Most probably answer is no. So if you remember last year, on the budget day, the consumption was the best performing sector. Did it perform well? The answer is no. So, sometimes the reality and the perceptions are quite different. And hence my request to all of you, please do not get too much excited about this. As I told you, some of the measures which has been announced in the budget are more in the long term in nature. We are not going to see the benefits of that maybe in the next 12 months also. Because these are more structural, more reform, more constructive, which will take some time. तो ऐसा नहीं है कि आज बजट का अनाउंसमेंट आ गया, कल से आपको उसकी बेनिफिट दिखना चालू हो जाएगा. So that's a limited point I wish to convey to you. So that's the reason I thought let me put this to drive home the point. So first let's try to go through what was the expected from the budget. The first is there was an expectation that more than 5 years holding will consider as an LTCG, which would be tax free. Unfortunately, there is no change in the either in the long term or the short term capital gain tax in the current budget. At the same time, there was an expectation that this budget basically will increase the threshold to up to 1.25 lakhs LTCG is a tax free, and anything above that would basically get charged. And the expectation of the threshold will increase from 1.2 to 2 lakh, which has not happened. So that is also not happened. So that's another disappointment there. STT reduction. वो तो छोड़ दो, STT reduction on zero. On the derivatives, the STT has been increased both on the futures and on the options. And that's only on the equity side, not on the commodity side. And post-budget, there was a conference, press conference. I think one of the justification which has been cited is that there is too much speculative element in the futures and options market, and they wanted to curtail it, which I personally believe it's a right thing to do. if 91% of the retail investors lose money in the F&O market, you need some amount of a disincentive for them to do that. And some of the capital market related stocks took a beating because of this STT hiking. So on one hand, the broker community keeps sending you a reminder, oh, futures options are risky, so on and so forth. And then the very next moment, they will encourage you to buy more futures and options or play more in the F&O market, which makes little sense actually. So, that's what has happened. So it's like in a movie theater, we said cigarette smoke is injurious to health, and the complete movie, where the hero will keep smoking, it defies the power. Something very similar happens with the broker community also. I know some of the brokers may not like my comment, but that's the reality of the life. And the last but not the least, it was expected that capex will go up, and it is actually. So there was not only capex from the government of India, but private capex. And I think the way this has been announced, there are a lot of announcement which has been done, which will encourage private capex, provided there is a walk the talk. But this is not going to happen. Again, I repeat, from tomorrow onwards, it's going to take some time. I think we need to give at least 24 months window for this to actually materialize. But once you have a consistency of policy, clarity of thoughts, then the investment comes. If you keep flip-flop every now and then, the private capex will not come because they don't know what. Today you are announcing something, tomorrow what happens, we don't know. Something happened with Venezuela. We all know that, am I right? So that's what I think, this is a consistency in terms of thought process, and I think that should get some amount of a private capex. But again, I repeat, it's not going to happen overnight. It's going to happen maybe on a 24 months kind of a window. At the same time, what was this one? Privatization push, somehow, PSU reforms, and one of the reasons today PSU banks basically did not perform well, purely because of, there are no announcement there. Good part is that 80,000 crore has been set as a target for next financial year. The revised target is 33,000 crore for this financial year. We don't know whether that's also going to get achieved or not. And there are two reasons why 80,000 crore may be possible, may be feasible, because of IDBI and LIC will also have to reduce its stake. Government of India will have to reduce its stake to meet the minimum float requirement. So that could be happen, but we don't know whether that's going to happen this one. So every year, now and then, the government has not been able to meet the divestment target. I'll cover that in my subsequent slide. What was the other expectation? The fiscal discipline. I think the government did a brilliant job in terms of fiscal discipline, and that's where I have given 7.5 to 8 to this government. Why? Because there was a fear, and even I was expecting that to happen, because if you give away the income tax benefit, if you give away a rationalization of GST and so on and so forth, where would the money come? And if the money is not going to come, the fiscal deficit would be a challenge. But I think government did a very good job. Not only they maintained the 4.4% fiscal deficit, which was suggested at the last year same time, but they basically bring it down to 43.1, 4.3 in the next financial year. And debt to GDP has been further revised downward to 55.6 as compared to 56.1. If you remember the new metrics which government has been talking about last year also, they talked about the new norm would be fiscal debt to GDP. Debt to GDP. And again, fortunately, India is one of the lowest in terms of debt to GDP. And within that, if you look at our external debt to GDP, has been quite minuscule. So in other words, should we really get worried about debt to GDP ratio, as many experts have been suggesting? The answer is clearly no. One of the reasons Japan has more than 200% debt to GDP and yet did not bother about it, pure for the very simple reason, most of its debt has been funded by the internally. There is no external borrowings which could create a lot of havoc for them. Lot of simplification happened on TDS side also, on TCS side also, which was expected. Job creation, which is the one theme which has been really come out very well, and I think government is basically looking at how do we create more jobs which can create, which can pay off demographic dividends. So again, that's where government did a very brilliant job, and again the export competitiveness, and I think that's where also government did a very beautiful job in terms of ISM 2002, Biopharma Shakti, chemical parks, and so forth. And of course, this European Union FTA which has been done, which is nothing to do with the budget, but I think which also ensure that we do that. So scaling manufacturing, I think that's one part which everyone talks about, and even government has an intention to increase manufacturing as a percent of GDP, which has been done extremely well. So what is that? The biopharma sector, 10,000 crore over 5 years for biologics and biostimulants, because there are diseases which are non-communicable like diabetes and so on and so forth. How do we basically reduce the cost of treatment? That's why government is focused about semiconductor ISM2, basically, which has been announced to speed up the new technology. Electronic components outlay has been revised to 40,000 crore. Rare earth corridors, I think that's a very good announcement which has been done, where Orissa, Kerala, AP, Tamil Nadu, where they basically the government want. So one is that also an Atmanirbhar Bharat, and I think that's another step which has been taken. So there are two things which comes out very clearly. One is the Atmanirbhar Bharat. At the same time, we also basically become an export hub for the global market. Chemical parks, 3 cluster-based parks for chemical manufacturing, and the capital goods like high-tech tool rooms and infrastructure equipment. And the last but not least, the 10,000 crore for the container manufacturing. So government is basically looking at the various aspects of the same manufacturing or the export competitiveness. Because sometimes we were thinking little more in a compartment-wise, not in a holistic manner. For example, we set up a manufacturing unit somewhere in the remote place, but how do we basically export that manufactured goods in a very competitive manner to the other parts of the world? There is no infrastructure, there is no container, there is no good port facility. I think government is basically moving in that direction. Can not only you basically manufacture the goods, at the same time that manufactured goods can be easily and competitively basically exported to the other parts of the world, and basically India become a more competitive in the world. The demographic dividend, and I think that's what government has been, labor intensive. And if you look at, whether it's a textile, whether it's a footwear, whether it's a tourism, I think that's where government has been talked more and more about, how do we basically employ, even they talk about, the training, the guide, they talk about, people in the optometry, and they are talking about that geriatric care and kind of a stuff, which is basically to focus on how do we, because AI is going to disrupt, whether we like it or not, the complete employment scenario. But there are certain sectors which will not get impacted by AI, and that's why government wants to do that. In fact, one good thing which has happened is that sports goods manufacturing. I think that's a very brilliant move the government is doing, and rightly so, that India can get its own fair share of, and of course India also wants to host Olympics. So this is the right way to do about doing it. Champions in MSME, and I think it's a very, very good, again, it's a part of not only ensuring that MSME basically keep strengthening, give employment to the largest section of the society, and that's where they have got equity support, liquidity support, and the professional support. All three things have been taken simultaneously so that they don't run out of resources of any side, whether it's a human, whether it's a professional, or it's a money, which they can basically run out of that. Government will keep spending money on infra, and those who live in Bombay would know that the amount of infrastructure projects. 11.2 lakh crore last year budget, we will end up spending near about 11 lakh crore revised estimate in financial year 2026. Again, which the government is allocating 12.2 lakh crore on the infrastructure. Is a very big push. Some experts are suggesting, where do we have the capacity to spend that kind of money? But I think government is talking about that. So I think it's a very, very big push. Talking about dedicated freight corridor from Calcutta to Surat. That's another thing. Well, national waterways we are talking about. Coastal cargo we are talking about. We are talking about seaplane manufacturing with viability gap funding we are talking about. We also, there's one more thing which has happened, which has not taken note of by, I think somewhere government wants to focus on REIT as a concept, and they are talking about that CPSE, that assets which are there, real estate assets are there, can be monetized through the REIT. I think it's another great way to do that. So there are, of course, again I repeat, nothing is going to happen overnight. I think it's a more long-term, medium to long-term kind of an approach that government has been focusing on. Energy, and within the energy, I think we are all talking about the new energy, which is rightly so, and the nuclear energy is another one which is getting a lot of attention, and rightly so. So I think government is again focusing on too many things at the same time to take India as a Viksit Bharat instead of focusing on yesterday's technology. I think they're talking about the future technology which will help India to leap ahead and create a Viksit Bharat. Financial market reforms, I think there are very good reforms that has been announced. High level committee on banking for Viksit Bharat. And as and when this committee will get formed and as and when the output is available, I think that we will see a lot of things. PFC and REC restructuring, rightly so, because the new energy need new kind of thought process, and that's why PFC and REC has to play a very significant role. Corporate bond market, again municipal bond, the incentive has been given, and the person PROI, which is again where norms has been revised from 5% to 10% and from 10% over the limit to 24%, which will further increase more inflow coming into the Indian equity market. Services is another one thing which government has been focusing about, and I'm very, very surprised, when government talk about that India should get 10% of the total service by 2047. It's a very, very bold statement government has given, and I hope we basically able to achieve that. So not only we are looking at manufacturing as a employment, but service is another thing which government has been focusing on through soft skill, basically creating a gap between what is required and what needs to be done. So they are doing too many things which basically help to make India as a Viksit Bharat. Again, I repeat, this is not a short term, it's a little long term in nature. Okay, farmer is again been talked about, fisheries, that has been increased, high value crop which has been focused upon, more and more, precision farming, more and more technology use that basically help farmers to use technology to expand their revenue, and of course the CMARTs, supporting women-led enterprise in rural economy to do that. So again, woman has been a focus area. While doing all this, what really gave me satisfaction that they maintain that macro and fiscal discipline. Why am I saying so? So GDP growth has been assumed at 7% GDP growth, which is a fair estimate. Public capex has been done at 12.2 lakh crore against 11.2 lakh crore last year. Fiscal deficit will come down to 4.3 as compared to 4.4 of this financial year, and the debt to GDP of 55.6 as against 56.1 of the last year. So on one hand, we are basically maintained, and if you look at the net borrowings, which is a very critical, because you can always crowd out otherwise the private sector, which has been put at 11.7 lakh crore as compared to near about 10.4 lakh crore revised estimate of this financial year. So yes, our near about 1.3 lakh crore what we call the net market borrowings may go up, but that was estimated by the market also. The market was expecting, so I don't think that's going to be due. So overall growth with a lot of prudence on the fiscal side, and eventually that will play after. Sometimes discipline does play in the medium to long run. New direct tax code will come into play from April 2026, which was stated, and this happened. There are certain relief which has come on TCS, for example. If you are now traveling outside India and if you are taking a package, your TCS will come down to 2%. The same way, if you have a children studying abroad, there also your TCS will come down to 2%. And of course, there are certain reforms where safe harbor norms has been announced, so that the certainty that you don't have to basically go into the legal litigation. Buyback rule was changed. You all know that, and it is considered as a dividend income. And we discussed that when Infosys buyback issue came up, and we discussed how you should look at it. So now again, government is saying that if you are retail investors, anything basically when you tender your shares at the buyback, it would be considered as a capital gain tax, and based on your holding period, it would get decided whether long term or short term, and it will not be considered as a dividend income. Because what was happening, those were in the 30% slab rate, they were paying little higher tax on that, and which created some amount of a headwind. So not many companies in last financial year went with a buyback because of change in the rule. But the new rule is only for the individual investors. For promoters, it's a little higher. STT has increased, MAT has been made at 14%, a tax holiday for a foreign cloud service provider till 2047, and that's a very, and of course the safe harbor coming in creates a lot of peace of mind, which will reduce litigation, and that's what we are talking about, ease of doing business that government has been harping about. Custom and excise, I don't think I need to go in too much detail because we have gone through that. So basically, if you look at it, the budget summary, it's a capex and manufacturing, job creation, financial deepening in terms of market reforms, fiscal discipline, and long-term growth. I would not be surprised in 2 years down the line, India's rating further get improved by the global rating agency. So it's overall very positive, this one. Very quickly, let's look at what has happened, the revenue projection. See, normally what used to happen by the previous finance minister, we used to always go a little overboard in terms of projections. And when we do that, invariably then you need to revise downward by the time the next year comes in. So if you look at the corporate tax, the assumption is only 10%, 11% increase in the revenue from revised estimate of FY 2026 to budget estimates of FY 2027. Again, 11.7 on taxes on income, 5% on the custom, but in others amount of GST has been expected to be lower than what it was last year, purely because of restoration which has been done. Sorry. In the budget estimates the India GDP to be 393 lakh crore by end of FY 2027. FY 2026 estimate is 357 lakh crore. In other words, we are expecting 10% nominally GDP growth. If India is to grow by nominal GDP growth of 10%, the growth of 11 to 11.7 looks very reasonable, and we believe that government has done a good job in terms of keeping the revenue this one. For some reason, if GDP get revised upward because of new series, I think there is a more chances of positive surprise than the negative surprise in these numbers. In terms of expenses, defense has gone up by 4.7. The rural development has gone up by 28.4%. And if you look at the urban development, which was 57,000 crore, has gone to 85,000 crore, almost 50% jump which has happened. In terms of subsidy, which has declined, which is rightly so. We all know that Manrega has been now called, a different name has been given, and state has to share the burden. 88,000 crore, which was this financial year, will come down to 30,000 crore. So almost 58,000 crore, this has been saved by the government. That's a very good thing. Food subsidy has been revised to almost 1 lakh crore. But if you look at the fertilizer, I would not be surprised if fertilizer subsidy further come down, because we do expect fertilizer prices to remain little low in the international market. If that is so, most probably the fertilizer prices, the subsidy may be little lower than what it was, much lower than what is the budget estimated of this financial year. Petroleum is hardly anything, and overall subsidy, which was 5.17 lakh crore, is expected to come down by 4.4 lakh crore in FY 2027. I think somewhere we should, if you look at the trajectory of the subsidy, which was once upon a time in FY 2021 was 8 lakh crore, we are talking about 4 lakh crore. And as the time progresses, I think somewhere we need to see that how do we basically reduce. There are two major subsidies which basically become a really, which takes over the major chunk of this. One is the food subsidy, and another is the fertilizer subsidy. And I think both has a great scope of further coming down. Disinvestment target, I don't know why this is so. While government has been a little conservative in terms of the revenue estimate, but somewhere I personally believe government has been a little going overboard in terms of the disinvestment target. Why I'm saying so? If you look at year after year, there is a that divestment target has not been met. If you look at this way, so if you look at it this way, in FY 2021-22, 75,000 crore, only 13,000 crore could be achieved. If you look at 2022-23, 65,000, 46,000, 51,000 versus 33,000, 50,000 versus 33,000 crore. In the last year budget, they said 47,000 crore will be achieved. Till January, we could achieve only 8,768. Now the budget document which was presented, they are saying 33,000 crore will be achieved. I don't know how they are going to do it. But for next financial year, they are saying 80,000 crore. I think this number looks a little overboard. Maybe one reason could be that they may be looking at IDBI Bank stake sale and to some extent LIC. Whether that happens, not happen. But this is the number. I will take it with little some amount of a pinch of salt. In terms of deficit, I think it's done a very good job. This number speaks a lot about it and looks very, very reasonable, doesn't look very optimistic to me. And that's where I'm very happy that government did a very good job in terms of this one. Capital expenditure, again, it increased from 3.4 lakh crore, which was 18-19, we will be spending 12.2 lakh crore. And if you look at the capex to the GDP ratio, which was 1.6%, has increased to 3.1. So I think government is doing a very heavy lifting. And with this reform which has been announced, who knows, 2 years down the line, we will also see private capex kicking in. A debt to GDP ratio is 55.6 as compared to 56.1. As I was talking about, external debt to GDP is only 16.2 as of September 2025. India is in a very good position in case if the global turmoil happens. India would be quite insulated to some extent because of this debt to GDP ratio. Fiscal deficit trend, you look at it, 9.2 because of COVID, 6.7, 6.5, 5.5, 4.8, 4.4 and 4. So if you look at the trajectory which we have been talking about, I think it has been quite good. And that's one of the reasons I do believe 24 months down the line, India should get upgrade in its rating. Where does the rupee comes from? This is the most cliched side you would see in every budget presentation. I don't want to spend much time here. And where does the rupee go? It's also very cliched. Anyway, you will get it tomorrow in the newspaper. That's the thing. So what is the market impact now? Market has really given thumbs down to the budget. Am I right? But having said that, when the budget speech got over, Nifty touched the low of 24,571. And by the time the day ends, basically it closed at 24,825. In other words, it recovered almost 300 points from the low. So to some extent, market did recover, but overall, market did give up most of the gain. In fact, 1.96% decline happened because of the budget, which has not been perceived to be a good budget by the market. There was a selling across the board, except IT. Each and every sector was in red. And if you look at the PSU bank was the worst performing sector with 5.76 because of the expectation. In fact, there was one more expectation. The 5 years bank deposit would consider as a tax exemption, which also did not happen. No news or no mention about the reforms within the PSU banks, and that really spooked the sentiment. Of course, the metal has been down not only because of the budget, but because of the global factors. We all know what happened to the gold and silver on Friday in the international market. To some extent, metal also took a beating, and this is what we see. That's the thing. Which are the stocks which did well? Wipro, TCS, Infosys. If you look at it, these are the companies that did extremely well because of the positive announcement which has been made in the budget. But if you look at Hindalco, it's a metal stocks. SBI 5.5%, ONGC 5.5%, Adani Ports 5.3%. Bharat Electronics down by 5.3 because of this one defense. So it's more of a PSU and the story of a PSU banks and PSU stocks. I think they've taken some amount of a beating which has happened in budget day. The BSE within BSE 500, you see some of the NBFCs and banks taking a beating, and some of the textile related stocks and some of the stocks which are into what we call outsourcing did reasonably well. Budget to budget, metal is on the top, PSU bank is on top, realty, FMCG and IT are in the bottom from last year, in last 1 year. Again, I repeat why I'm saying so, because if you remember last year, the consumption was supposed to be the biggest beneficiary because of income tax. And if you look at it, the consumption actually underperformed, is up by only 3.04, and the FMCG is down by almost 10%. So sometimes what looks obvious because the budget benefit may not turn out to be a beneficiary in the immediately. Normally, last year was really bad, and if you can please make it hot. Good, thanks. So last year, post budget, the market tanked by almost 6%. Nifty 50, BSE mid cap was down by 10%. MSCI small cap was down by 14%. It's not only because of budget last year, because last year budget was supposed to be good actually, to be honest with you. It's more because of the tariff tantrum thrown by the Trump. Do we expect very similar kind of a behavior this year? The answer looks no. If you ask me very frankly, most probably, despite today we took a almost 2% beating in the Nifty 50, who knows, the market may close for the month of Feb in a positive note. So what is our outlook now? Market was expecting movie like Dhurandhar, with a lot of action and so on and so forth. It turned out to be a art movie like Super Boys of Malegaon. So वो थोड़ा disappointment market के लिए रहा है, but that's the way, we're expecting T20 kind of a play. It turned out to be a 5-day kind of a match. Remember, there is nothing negative in the budget which calls for 2% negative. I want to harp on this point. Why did the market fall today? Because capital gain नहीं आया, पर नहीं आने से negative थोड़ी हो सकता है. It has maintained the status quo. It is not that capital gain has been increased. So there is no negative news, and yet market went down by 2%. Eventually, market will get a sense of this, that market में कुछ budget में कुछ negative नहीं है, and market will see a positive side of it as the more and more day passes. So remember, there is no negative news in the budget which called for 2% decline in the budget. Unfortunately, expectation नहीं होता है, and I think we are all victims of high expectation. My request to all of you, please don't expect every year good budget. When I say good budget, not in terms of the content, in terms of more and more relief from the government of India. It's not going to happen, because if you want to maintain the fiscal deficit, if you want to maintain the debt to GDP, don't expect moon from the government. It's not practically not possible. What is possible going forward would be ease of doing business, ease of filing income tax like TCS on your education when you travel abroad, your kids travel abroad, or if you travel, that this kind of things will keep happening. And I think that's a very good thing that will happen. But don't expect too much income tax relief or too much on the capital gain. I think government has rightly taken a long-term approach, and which I believe is a good government that says we will not basically go to the populist measure, but we will be more prudent in our terms of our policy making. So the impact of the budget, most probably tomorrow evening 3:30. Suppose that market will be function of domestic and the international news. So what are the events that are lined up very immediately? Who knows? We can get some Supreme Court verdict on the US Supreme Court tariff that will come in. Monetary policy from the government from the RBI. Result season is still in a walk. It's still not over. Double-digit net profit growth both quarter on quarter and Y on Y. I think that's one thing which market will look at it. तो कल 3:30 के बाद बजट का इम्पैक्ट कुछ नहीं है मार्केट के ऊपर. सो थोड़ा ज़्यादा नेगेटिव मत हो जाइए, चिल हो जाइए. सेकंड थिंग, प्लीज ब्रिंग बैक माय स्लाइड प्लीज. Our view on the market, the manufacturing and the new age industries will get benefit. Focus on the sectors which are employment generating. There are a couple of reasons I am talking about. Again, it's not very short term, but medium to long term, because of FTA signed with the European Union. Government is basically sending a very rightly so, the message that we want to generate more and more employment, and which is also could be an export driven. So textile हो गया आपका, leather related हो गया, agri related हो गया, tourism related हो गया. I think they are all going to do extremely well. Government also talk about good infrastructure in temple towns, which is also saying that we would want to basically do that. So I think that's where, so tourism is one sector, because they talk about training the guides and so on and so forth. So I think, and of course they talk about medical tourism if you listen to the speech. So these are all the measures which is going to do that. Again, I repeat, these are not short term, they are medium to long term, which will play out. If you remember, I was in front of you with our equity outlook 2026 because the budget. Are we changing our equity outlook 2026? The answer is clearly no. I again repeat, there is nothing negative in the budget. We again reiterate, despite not a great start of the 2026, Nifty 50 we still believe can give 15 to 20% return in calendar year 2026. Since government has focused on fiscal discipline, fiscal deficit, debt to GDP ratio, I strongly believe that FPI will come back. Today I was listening to some of the one market expert and say आज तो FPI था नहीं, कल आएगा बहुत बेच के जाएगा. I don't agree with that statement. I strongly believe because of the fiscal deficit, because of the debt to GDP ratio, I think government has done a wonderful job, will send a very right message to the institutional investors, and FPI will come back very strongly. So STT impact is a short term in nature. I do understand it's a sentiment spoiler, but I think this will bring in more serious money to the equity market. No one likes investors losing money, their hard-earned money. And the reality of like that 91% of the retail investors are losing money on future option is one way, is a detrimental. कभी-कभी बोलता है ना दवाई थोड़ी कड़वी होती है अच्छी नहीं लगती है, but it's good for the health. And I think STT hike is like that medicine which is little bitter in taste, but I think is good for the health of the retail investors. And since budget estimates in terms of revenue are in line with this, I don't expect, we should expect any negative surprise as and when the next budget comes in. So overall, this budget is 7.5 to 8 out of 10. It's a good budget. Laid the good strong foundation for the Viksit Bharat. Yes, there are no negatives, but at the same time, there are no kind of a masala in the budget which can make the thing interesting. But sometimes we should not expect a finance minister to keep hitting 6 on every budget. So this is a very good budget according to me, and hence don't get disappointed too much. Don't sell your blue chip in this market because the market has gone down by 2. Remain calm, composed. We are all going to create a lot of wealth from the equity, and hence I said again 15 to 20% Nifty 50 will give returns in calendar year 2026. With this, I have actually overshot my presentation time. Let's open the floor for question answer. For some reason, Jason, if you have to extend the Q&A, please do that.
Sure, I'll make a note of that. This first question by Suhas. Namaste, Sunil sir. When our markets are underperforming the global markets, when US tariffs sword is still hanging on our head, how far it is justified to disturb the sentiment of the markets by increasing STT, even though only through derivatives?
So I agree with you. Like, if you look at this way, that we needed sentiment booster for the market, especially when things are not so positive for Indian market. 2025 we have been underperformed. Beginning of 2026 we have been underperformed. So ideally, if you ask me, government was it STT increase nahi karna could have been a choice, but I think somewhere government want to say market kharabi hai to let it be. Basically, when you are not doing well, lot of corporates basically do a one-off write-off some expenses. कैसे भी खराब result है और खराब है तो let it be kind of stuff. I think that could be the thought process. If you ask me, I don't do a single rupee trade, but I think in a way it's a bitter medicine for the good long-term health of the Indian equity market. जो पैसा आदमी का, and who is making the money? Okay, the retail investors are losing money, so who is making money? All high-frequency traders. Who are those? They are either the broker or the FPI. तो हिंदुस्तान का रिटेल इन्वेस्टर का पैसा FPI लेके जा रही है. I think somewhere this will be stopped. So it's a good. I know थोड़ा bitter medicine, no one likes it, but I think it's a good move. So I know it's not a. And again I repeat, Suhas ji, कल 3:30 बजे के बाद no one will talk about. People will forget about STT also. In the sense, STT they will move on in life and will accept this as a new normal.
Okay, moving to this next particular question by Kaushik. The budget announced an excise duty exemption on the biogas blended with CNG. Do you think this is another great fillip on the renewable energy, giving benefit for both CGD sector and waste to the energy sector?
So Kaushik sir, see, if you read the body language, the content, and various places of the budget speech and the budget document, I think government is very clear cut that they want to physically focus on the renewable energy. And that's why the carbon capture, battery storage and so on and so forth. They want to, because somehow we don't want to basically, and that's one of the reasons why PFC and REC will get restructured. So it's Because see, India cannot basically keep relying on the fossil fuel and the environment concern and so on and so forth. So the focus is renewable energy, and hence I again repeat, the next 5-10 years, the benefit of this renewable energy will come up so well that people are underestimating that actually. So I think we are in the right direction. Yes.
Okay, this question by Sanjay. Hello, sir. Long-term capital gain tax remains untouched in the budget. How will this affect the market going forward? How will FIIs react to this?
So on the contrary, sir, FII should react very positively because we have maintained the fiscal discipline. We have reduced the debt to GDP. We are focusing on making India future ready. Whether it's a data center, 2047 तक आपको tax नहीं देना, income tax. If you set up a data center, this will bring in a lot of FDI. People don't understand that FDI will come into this. You know, they're talking about the tall companies basically. If you set up this one, that benefit is there. So संजय जी, ये ना थोड़ा मार्केट में बोलता हूँ मसाला पानी पूरी वाला टेस्ट नहीं है, तो थोड़ा पब्लिक को थोड़ा इट्स लाइक मोर लाइक ए bland salad is being offered and people don't like it, but it's very healthy for the Indian economy health. Am I right? So and see, if you ask me, LTCG will go up, should go up logically. And if you read one of my tweet, I said, so there are two things which will happen, Sanjay ji. Not today, it does not happen in this budget, but eventually it will happen. Whether it happens in 2 years, 3 years, or 4 years, or 5 years down the line. There is nothing called short-term capital gain in the world. It will get clubbed with your personal income tax slab rate. And then ideally, the LTCG should be a function of your holding period. So, 1 साल है तो आपको इतना टैक्स होना चाहिए, 1 to 2 years हो तो इतना होना चाहिए, 3 से 4 है तो इतना होना चाहिए, 4 से 5 है तो इतना होना चाहिए. तो in fact, logically it should go up. Second thing, if you remember, the finance minister has been talking about why there should be a discrimination between various capital assets in terms of long-term capital gain. Today, equity is getting a favored in terms of LTCG. So, on the contrary, if you ask me, it is untouched is a positive thing. It's not a negative thing. Eventually, all because direct tax को नया code आ गया है, they want to simplify. तो कोई भी capital gain होगा आपका long term, every assets will be treated on par. So, mentally be prepared. LTCG will go up as the time. So, by not doing this, I think they did a favor, and FI will come back, FDI will come back very strongly in the calendar year 2026 because of the budget.
Can move to this question by Prince Kaur. I think he's also agreeing with your point. He says government has missed the opportunity to infuse some hope and cheer in a demoralized and hopeless situation, especially created by Trump's tariff drama and other negative factors. Rather, government looks like has added more to the woes. Government has approached the budget philosophically and not practically. So when will market bounce back, especially metals, PSU banks, defense stocks?
तो मैं बोलता हूँ सर, जो एक्सपेक्टेशन कुछ ज़्यादा ही रहता है हम लोग का. वी वांट फाइनेंस मिनिस्टर टू कीप गिविंग शॉप्स एवरी बजट विच इज़ प्रैक्टिकल नॉट पॉसिबल. आप वो करोगे तो फिर आपका फिजिकल डेफिसिट विल गो हैवायर, योर डेट टू जीडीपी विल गो लिटिल हैवायर. वो शॉर्ट टर्म में अच्छा लगता है पर लॉन्ग टर्म में बहुत ख़राब लगता है. इट्स लाइक ईटिंग फास्ट फूड, जंक फूड इज़ वेरी टेस्टी, बहुत अच्छा लगता है खाने पर, बट बेसिकली डैमेजेस योर health eventually. Am I right? So I think government has tried to focus more on the long term. So I personally believe, I think government did the right thing in terms of maintaining the fiscal discipline. In terms of your question, when will the market bounce back, especially metals, PSU banks and defense stocks? I don't know, sir. Metal, a lot of people have been asking about copper and this and that way. I think it's all function of what happens to the global economy. And some of these companies have run up too quick, too fast. So a lot of good things are already there in the price. PSU banks should bounce back because government has is planning to set up a high committee which will come out with some, I don't know the timeline and who all will be members, but that should, and defense companies should do reasonably well. Why? Because whether we like it or not, government will have to spend money on the defense. Why? Because we don't have a very friendly neighbor and geopolitical tension has been rising this one. So PSU banks and defense stocks should do reasonably well. Metal stocks, I'm not very sure since they've run up too quick, too fast.
Okay, I'll pick this question by Udanag. Compared with the budget of the previous 1 or 2 years, this year, which sector have received higher priority, lower priority, and which sectors have continued to receive priority?
Okay, it's a very a good question, sir. I'm very happy that you asked this. So which sector received a higher priority? I think so if you look at the theme, and this has been theme which has been playing out every year. It's not that this is the year the theme has changed, and that's what really like about the continuity of the thought process with the government. To which sectors are given a higher priority? I think the renewable energy, the tourism. If you look at it, government has been. If you look at the last year budget, also government first focus on a lot of things on the tourism. This again has happened, so that's a higher priority. I think the one theme which is basically focused domestic, which are employee generating, and at the same time it can earn good amount of forex also. So that's been a very very high priority kind of a sector, which has received the lower priority. I think government basically somewhere making very loud and clear that they don't want to have too much polluting related industry. So there are no shops, nothing. I think somewhere government also want to move away from the old economy kind of a mindset and go towards the new technology, whether it's an AI and so on and so forth. So that's where basically government is basically focused. That's where the low priority, which is more polluting in nature, that sector has been done. And which sectors continue to receive priority? I think which are agri, for example, if you look at it, you look at the labor intensive industry, whether it's a leather, whether it's a textile, they continue to receive the priority. So this is what has happened. So theme has been very, very clear cut. Focus on the demographic dividend, focus on the Atmanirbhar Bharat, and focus on making India competitive globally. So tomorrow, if you have to compete with some of the best in the world, our cost structure should be very, very competitive so that we can export and we earn the precious forex reserves.
Okay, I'll pick this next question by one of the investors. He's like, what is the single biggest message the government is sending through Budget 2026?
I think the single biggest message is that India is preparing itself for the Viksit Bharat. India was looking at the all-inclusive growth by adopting AI, semiconductor, and making India a digital first. So I think that's the message which is coming out loud and clear in this budget. And this not only this budget, if you read other day I was discussing one of the fund managers and said, sir, this year government will talk about debt to GDP. बोले भाई साहब लास्ट ईयर भी तो बताया था उन्होंने. लास्ट ईयर उन्होंने ये भी तो बताया था कि कितना नॉमिनल जीडीपी ग्रोथ होगा, उससे कितना अपना डेट टू जीडीपी नीचे जा सकता है. So people have very short memories. I think government is basically a single message. Government is saying Viksit Bharat, inclusive Bharat, and making India in the developed economy state. And it's a move in the right direction. And it's not a one-day movement, sir. It's a movement which will keep happening every year. And that's a continuity which government is. The government is saying continuity, ease of doing business, and taking everyone along in this developed economy.
Okay, this next question by Amrita. Will the budget excite FIs to invest? If yes, which sectors?
Of course, yes. Again, I repeat, Amrita ji, there are two things which will happen in 2026. FDI will come back very strongly and FI will also come back. And which sector? I think, if you look at the sector which is basically, government is basically focused on one which is basically pharma, where they want to talk about biology, the parks for the CDMO is one basically which will get some benefit because of toll. They are talking about the chemicals is a one basically clusters. They are talking about textile is one basically which could get a lot of this one. Some of the new energy companies that will get benefit kind of stuff, so on and so forth. So these are the sector which FI, and of course the IT seems to be one sector that will also attract some amount of money from the FI because it can absorb, and of course the NBFCs and the complete BFSI space, which will also attract, if the India is strong, if India's fiscal deficit is strong, if India's credit rating agencies can improve, the banks would be one of the biggest beneficiary of that. So again, the BFSI segment could see a lot of benefits, and of course those which are export focused would also get benefits. So of course that includes pharma also, that includes textiles also, that includes IT also.
Okay, this question by Jaydev. Just your personal opinion, if you had a chance, what would be some changes you would want to make in today's budget?
Jaydev ji, wish that is a reality that happens. So I think what is the change I would have basically look at in this budget. It's a very you put me in a very spot actually. What I would have actually done it. If you ask me, I would have actually clicked the long-term capital and short-term capital gain. What I would have actually done is that STT, short-term capital gain, your income tax slab rate, do away with the STT altogether. Am I right? And long-term capital gain, make it in a slab-wide. The longer you hold, beyond 5 years, it would be zero, and anything between 1 to 5 years, starting from 15%, and then gradually come down to this one. There's one more thing which I think government should have done, the finance minister should have done, making some incentive to the banking sector in terms of the deposit. What is happening today, the savers are becoming investors. So what is happening, the credit deposit ratio in the banking system has reached its peak. So tomorrow, if more demand comes from the private capex, bank will find it a little difficult to lend money. So there should have been some tax incentive the budget should have given on the fixed deposit in terms of tax benefit, which could have again taken some money out of this the investment mindset to the savings mindset, in the sense putting money in the banks in terms of the FD. So somewhere government should have come out with some incentive where people go and put some money in the FDs so that banks have an ability to lend more. Of course, there's more of a structure. These are things I would have actually looked at it. But otherwise, I think the budget did a wonderful job. That's one of the reasons I'm saying 7.5 to 8. I would love to give to this budget.
Okay, I can't make stock specific questions, but looking at this question by Ashok, I think he's asking about capital market stocks. What would be the impact on stocks like BSE, MCX, and CDS?
So Ashok sir, definitely since STT has increased on FNO, and we all know that like company like Angel has of the stock broking, 85% of the revenue comes from the FNO side, only 15% comes from the cash segment. STT बड़ा है, if people are finding it difficult. In fact, I'll give you a very classical thing. Yesterday only, I was talking to one of the market guy, and he happened to be the customer of an Angel. And he was saying, Sunil bhai, I paid 9 lakhs as a brokerage to Angel in this financial year, 6 lakhs as an STT, and my total profit on my futures and options is 11,000 rupees. तो मेरा आप तो ब्रोकर और गवर्नमेंट के लिए काम करते हैं, वैसा ही हुआ है. So I think this will discourage. So some of the broking companies will see a lot of impact. Company like BSE will see some impact because the volume will come down, and that's what government wants. That's why they did it actually. If you happen to listen to the press conference, that's what the intention is. And if the volume comes down, the revenue of the exchange will come down. So MCX and CDSL, there is no direct impact because there is no. So okay, let me clarify. There is no increase in commodity. So MCX is a commodity exchange. Am I right? But yes, it can get an impact because of what is happening in the gold and silver prices, what is happening in the metal prices. That's where it could get an impact. But otherwise, because of this budget, the capital market related companies will get a beating, and I think they will see their revenue coming down. If you look at the numbers which has come out for December 2025, it's not been very great for some of these the capital market related companies. I think it will further deteriorate once the new STT norms comes in.
Okay, moving to this question by Yahya, he has asked, should we invest in gold and silver, and what do you think would be the future of the Indian stock market?
So sir, I have been selling gold and silver as a part of my assets allocation. 15% should be there. So reason I am selling because I believe, again I go back to my equity outlook 2026, where I stated that I would not be surprised if gold and silver either give muted returns in 2026 or give negative returns in 2026. On Thursday, I was with our PMS customer and I said, in October 2025, on 16th October 2025, our PMS customer wanted to know whether they should buy silver or gold. And I said, you please buy silver because the ratio of gold-silver ratio was 80. When I did the presentation on Thursday, the ratio was 46, and I stated to them on Thursday, it's time to come out of the silver. If you have, if those who are PMS customer would definitely go through that webinar of mine. But if you are not a PMS customer, please ask one of our friends who is our PMS customer. He can or she can share the link to you. So we believe that so any assets, sir, which move up too quick and too fast normally comes down equally fast. So I would not like to increase my allocation to gold and silver. But again, I repeat, gold and silver is a part of a assets allocation strategy, not a view on the market. So 15% should be that. And what is the future of Indian stock market? Very bright. I again repeat, Nifty 50 in 2026. After listening to budget, I'm saying will give 15 to 20% return in 2026. And versus that, gold and silver may give muted or negative returns.
Okay, I'll pick this question by Vikram Sharma. Sunil sir, markets faced a lot of pressure with FIs pulling out and depreciating rupee last year. What do you think would revive both this year?
So I think the reason, one is the valuation. So if you look at India's market cap as of today is 448 lakh crore. India's GDP FY 2027 is 393 lakh crore. That's what the budget document says. So we are looking at market cap to GDP of 114. If you look at the Indian earnings growth in the December quarter, then Y on Y and quarter on quarter is 10%. One reason FI move out of India, there are two reasons. One, lack of earnings growth. Number two, the valuation. Now the valuations have become reasonable and growth in earnings might come back. So that will. And third thing I think, which is that some of the markets like AI was the name of the game. Somewhere that AI and India was not having AI as a theme to play. It looks like that AI as a theme will see some amount of a headwinds. If that is so, India will get its fair share. So 2026 will see money basically moving out from US to the emerging markets, and India will get a fair share of it. At the same time, I do believe that a lot of money which has gone into gold and silver will also, because if gold and silver start behaving the way it has behaved in the last couple of days, some money will not go to that, and the money which was used to go to gold and silver will get diverted to Indian equity market. So that's what I believe will make FI come back very strongly in 2020. I hope that answers your question, Vikramji.
Okay, this next question by Sivate. What's your outlook on defense sector with the increased allocation now coming to defense?
Sivate sir, I believe defense as a sector should do well. Some of the companies are commanding a very rich valuation. I was looking at some company which is commanding more than 3 lakh crore market cap. I essentially don't know whether they should command that kind of a market cap. But there are certain companies within the defense are looking very, very promising. And I still believe there's a lot of scope. So what we will see some kind of a K-shape kind of a movement within the defense company. Some company will do well, some company will move down. So business-wise they will do well, but in terms of capital appreciation-wise they may not do very well. Okay, so there is a two different thing. So I think little more stock selective, but business-wise, all defense companies should do extremely well. I'm very, very confident. And with this EU FTA which has been signed, which defense is one item, I think we should see some of the more collaboration also happening with some of the European companies within the defense space. So the overall business outlook is really very good. From the capital market, capital appreciation point of view, be more selective.
This question by Frank. Hello Sunil, who's the ultimate budget owner for these largest cost centers, and how much flexibility do they have to move funds between categories?
Okay, Frank is saying ultimate budget owner of the largest cost center.
Between the data centers.
Okay, and how much flexibility do they have to move funds between categories? Sir, to be very honest with you, I did not got your question right, and I don't want to make any assumption and move in the wrong direction. If you can rephrase your question, I think that will really help me.
Yes, Mr. Sunil, that's it with most of the questions for today.
Oh, thanks a lot, everyone, taking time out. Day after tomorrow, that's on Tuesday. I'm going to discuss about equity outlook. I'm going to cover gold and silver in a very detail in that webinar. Please come and do join me. I also want to talk about the gold-silver ratio, where it is, how we should expect, and what are the events that's going to line up in the coming, which could shape the equity market. So please join me on Tuesday at 7 p.m. Good night. Take care. Thanks for joining this webinar.